Did you know you can secure your retirement account with physical gold and silver? My friends at SD Bullion can help you protect your retirement today. Just visit sdbullion.com/IRA. Well, happy Tuesday, TFMR. It's Tuesday, March the 10th, and it is time for a little Aloha podcast. My apologies about yesterday. There's a lot of work I intended to get done on what is extremely long flight, and couldn't get it done. As I wrote this morning, the airline Wi-Fi worked just long enough to take $35 out of my account, and then I could never get it to work again. So no written podcast yesterday. A whole bunch of other work I intended to get done, which includes what should now be a series of guest posts to kick off your day, at least for the next week or so, if not longer, in that some of your friends, people that have written guest posts before, I reached out to them and said, hey, if there's anything on your mind, send it over. So as we go forward with this kind of odd schedule that I've got here for the next couple of weeks, we will look for a guest post of some kind in the morning, unless something's really crazy going on and I'm up late at night watching stuff. And then a podcast like this in about this time frame, hopefully every day, as we stay on top of things. It looked like we were having a heck of a day today. As soon as the stock market was really puking and oil was really soaring, and all of a sudden the unknown unknowns were starting to pile up. Oh, look at that. Maybe it's not fair to call it Trump always chickens out, but as soon as the beloved stock market looked like it was in trouble, oh boy, now all of a sudden, we might be about done with this. We're about ready to wrap it up. That plunged crude oil yesterday, which I'm sure was helped along by those market interventions that have been discussed for the last week. We know how those feel, don't we? Market interventions to slam price backward. Crude got all the way down today to a low of $77 from a high, Sunday night of 119 or something like that. Remarkable. But anyway, it looked all well and good and hunky-dory and all that kind of stuff. And the stock market was up today. And then news hit, as I record this about an hour ago, that it looks like Iran might be making preparations to mine the Strait of Hormuz. Now, we'll see how successful those are. Go out in little small boats, throw mines over the edge, It's, in a way, we'll see. It's like I've always thought, it's more the threat of it than anything else. If you know it, you just put a handful of mines out there and people don't know where they are. I don't know if it works that way. But anyway, that had an immediate impact. Crude oil completely, it was already back up to about 80 off those lows. Then it went to 85. And the metals got worked over too. I'll show you a chart in a minute. They're now kind of coming back a little bit as I record this. It's about 10 minutes or so until the New York Stock Exchange close. And we've come back up maybe $10 from the post-mine lows. Anyway, the moral of the story is I don't think any of this is over with. They try to talk a good game, but, the Iranians would have to play along too. And I think that's part of the realization that is setting in this afternoon. A lot of reports that Khamenei's kid, who they elected, has already been nearly wiped out in the hospital, all this kind of stuff. Again, my concern has been that you got this now diffuse leadership there that is capable of anything, most particularly kind of a scorched earth policy on the way out. And anyway, my fear is this is still far from over. And because the predominant trade now is that war is good for crude but bad for gold. And if it's bad for gold, it must be bad for silver. And since silver and the mining shares are once again tied at the hip by algorithm, any bad war headlines that make crude go up immediately crush gold, crush silver, and crush the mining shares. It's not going to stay like this. Wrote about that again yesterday. There will be a rationalization and a realization at some point that perhaps this is an incorrect assessment, a market inefficiency. seeing how this is going to play out. But for now, it's clearly still the case. But we did, again, nice to see a recovery. Nice to see the charts bounce off of where we want to see them bounce. So that's good as well. But obviously, as we make our way through the rest of the week, just about, I mean, you can't say with certainty that any one thing is going to happen. That's for sure. Let me give you a little open interest news. How about that? Today was a COTS survey day, so that'll be fun come Friday. Friday, Monday, so 2 days of price and open interest changes. Gold up $25, okay? Up 55, down whatever, 30 or whatever it was. Open interest down 8,600 contracts. Now back under 405,000. And again, it got down to 401 back in early February, and that was the lowest in 7.5 years. Now, it probably came back up a little bit today, because at one point price was up $140. But nonetheless, still very slim participation in desire to play on the COMEX. Silver, check this out. Up 234 Friday to Monday. Open interest up a whopping $200. Or 200 contracts. $200. To 114,000. A bond market kind of rallying back today. Yields down a little bit. Dollar kind of selling off today. Down about 40 cents. But again, I can't describe this as anything other than just a state of flux. And we're a slave to the headlines, at least for now. I'm tired of it. I don't like it at all. It's not, again, I don't like the war component. I don't like the unknown unknowns. I don't like everything that goes with it. But I also don't like having to pay attention to markets that are trading in these circumstances too, because it's just all, I mean, what are you going to hang your hat on? How do you guess what's going to happen one day to the next when, at least when there's economic data that's driving things? Well, we can kind of analyze what we expect out of the economic data and, make our bets from there. When it's stuff like this, you just feel like you're, just adrift on the ocean, slave to the circumstances and the headlines. And that's kind of where we are. Okay, so let's just move this along. Here was the big headlines. U.S. intelligence assets have begun to see indications Iran is taking steps to deploy mines in the Strait of Hormuz. Again, you'd think little boats going out with mines would be pretty easy targets, right? But nonetheless, I mean, you send out 1,000 of them with 2 or 3 mines each. Few are going to get through, and then once you know those mines are out there, I don't know. Do you send minesweepers? I don't know any about this stuff. Maybe there's some old naval people on here that can explain it better than I can. I would just think if you knew that there was one out there, that would kind of, change the calculus a little bit too. And it also indicates Iran's, again, that scorched earth stuff. You've read all the stuff about, there was central, what do they call it, mosaic or something like that. You get, instead of the central command, there's like 30 regional commands that can now make their own decisions. This is asymmetric, and again, I figure it's far from over at this point, regardless of what the politicians might say in trying to talk the stock market back up. Anyway, further details, mines carrying, or little vessels carrying 2 to 3 each. They might have as many as 4, 5, 6,000 mines. Okay, so anyway, what did that do? Well, we were, as you can see, this is just the 1-minute charts. This is not Central Time or Eastern Time. This is Hawaii time. So this is back about an hour ago. Crude had come up off its lows, and then right there you can see the moment at about 8:13 Hawaii time, which is 2:13 New York time. You get this spike in crude and the identical plunges in the precious metals. A little bit of an update from our friend Bai. You can see what happened in China overnight. Big, nice rally back up to 101 in Shanghai silver. So, again, not surprised then the COMEX silver had to rally today with a high at one point of, $90.37. Plunged back down to about 88. I got 88.55 right now. And then there's this too that he put out, the notification he got from China Construction Bank. Again, March the 3rd, but whatever. Implement dynamic transaction limits because of rapid growth in gold purchases. Again, these are the underlying dynamics that allow me to feel comfortable in buying the dip. So there you go. Okay, and then finally, this, I didn't include this yesterday because, well, I didn't get a chance to write anything yesterday. But here's your updated schedule. We had home sales today. I didn't even see what it was. Tomorrow, though, actual data, 8:30 Eastern, CPI. Okay? That will be, well, it'll be cast as it'd have the effect of crude oil price in it. Nonetheless, we'll see if it's where it was as of last month. The latest monthly Treasury statement will come out tomorrow as well. That's the one that, shows you month by month. We're 5 months in now to the new fiscal year. It's almost halfway through, so we get a good measure on the profligate spending of the United States. And then as we get deeper into the week, PCE, the Fed's favorite inflation indicator, durable goods, and then, again, JOLTS. Usually get JOLTS before the BLSBS. This time it's afterwards due to that, whatever, government shutdowns and everything else. But the JOLTS report also on Friday. So Friday's going to be a very busy day from a data standpoint. All right, just a couple of charts. Here's, again, the dollar index within the broad range that is roughly 96.50 to 100. You could drop it down to 96 to 100.5 if you want, but it's in that range. And then you had this kind of little pennant forming within it that now we've spent 6 days above. But you could also say, well, it ran into smack dab into resistance at 99.5, and now is back down. So we'll see. Like I said, right now I've got it down 40 cents, a little bit higher. I'm at 98.75, not 98.67 on this. But it would sure be interesting if it fell back in. Now, again, obviously the predominant trade that has just been controlling everything now for a week and a half, war headlines, buy the dollar, sell bonds, sell gold, buy crude, sell silver, sell the mining shares. And that remains the case, at least as of this recording. And then just your major charts. Again, as we've been discussing, the red line is the 20-day moving average, and gold continues to find support at that thing. The risk that we run, and the thing we'll have to watch for, is if it breaks down below the 20-day and then dumps and starts closing below the rising 50-day, which is currently at $4,900. Now, that's $300 down from here. We'd have to have a real, liquidity crisis calamity trade on to have that type of thing happen. So I don't think that's where this is headed. But for now, again, look at this. Finding support, just as it did all through February, as it did back in late December, back in early December, back in the middle of November. Okay? So you can see this trend remains intact. And that's obviously, feel good about that. Silver jumping up here. I printed this 88.58. Like I said, I've got a last of 88.28, but okay, that's fine. Back above its 50-day, back above its 20-day. So that's good. Back above 85. Let's just see. If the bad news is going to roll with us again through the middle of the week, we're going to be paying attention to 85 again. And can we support, if you're looking to buy the dip, trade the dip because you think, okay, this overriding thought I keep going with, stronger dollar, sell bonds, sell gold. If you're going to get a dip, but you think that's going to wear off, buy that dip down somewhere around 85, just below the 50-day, just above the 20-day, and then see if you can rally into the end of the week. Again, holding above 85 would be good. We've got 3 days to go in the week. Getting back above 90 by the end of the week would be good. Remember talking about that 2 weeks ago? For now, though, if anything, it looks like we're just trading sideways in a more broad consolidation before we make the next move higher. Shares, okay. Couldn't seem to get above its 20-day moving average. Let me see it. Right now as I speak, the New York Stock Exchange is closing, And the GDX is up a full point, 103.50. So it's down from where I printed this. Again, look, it's trending higher, right? Higher highs, higher lows. Clearly overcooked, right? There's no reason it should be down 15%. Oh, I know energy is an important component of mining, okay? But so are high metal prices, okay? So this is way overreacted, in my opinion. And again, going back to the double bottom low in early November at 68, you can clearly see the trend line 2 days in a row, Friday and yesterday, opening below the trend line and the 50-day, and then rallying with green candles the rest of the day. That's a really good sign. That's a sign that actual human beings are like, okay, this is overcooked. This is the time to buy, okay? If it was all computers, if it was really, oh, we're all doomed, you'd have busted down at the open and then sold off, right? And just kept dumping out and, we'd be talking 90. But instead, those big green candles, I think, are your tell. Today's bounce back was lame. Don't get me wrong. But I like, again, the pattern, though. The pattern continues. Higher highs and higher lows, and that's what you want to see. And then finally, again, I've written about this for years. You get these periods of low interest, low open interest, low trader interest. We talk about how small the speculative positions are in silver. It becomes very easily to have your markets just overtaken by algo. And if you've been around here for any length of time, or all the writings I've made for Sprott Money over the last 10 years, the clear algo link between silver and the GDX makes no sense, right? These are major gold producers. What does that have to do with the silver price? This is the last, month, not even that. But you can make these charts yourself at bar chart, and you can take it back 10 years and see the correlation. Well, here you are going back to February 22nd. That's as plain as day. So while this holds, the shares aren't going to do anything really unless silver starts to rally back. Or we get, human beings. Like I said, we've seen some indications of this last couple of days. We get human beings start going, okay, yeah. Because even look at this. Over the course of this 3 weeks, silver's up 4%, while the GDX is down 1.7. All right, so that's an inefficiency that I expect to be corrected in our favor. Bank error in your favor. Collect $20. Okay. Anyway, hang in there. Keep an eye on the headlines, and I'll be kind of doing that too. And we'll do this again tomorrow. Thanks for listening. Thanks for your patience with my schedule, and we'll see what tomorrow brings. Your pal Turd Ferguson signing off, and I'm out.